Welcome to the latest Motley Fool Scoreboard. I'm Anand, Chokkavelu. We've got longtime fools, Travis Hoium and Lou Whiteman, giving a 1 to 10 rating to the shoe company behind Hoka, Ugg, and others. It's Deckers Outdoor, ticker symbol DECK. First, we'll rate the strength of the business, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Lou's at a 7. Travis is a little more bullish at an 8.
Yeah, let's not forget about Teva. That's the other brand that you missed there on, and very, very small, but always one that surprised me with them. Look, this is a business that continues to be on the upswing. The market was not happy with their recent quarterly report, but 17% growth, really solid. And I would, in this space, in the shoe space or fashion space, I would rather be the disruptor than the disrupted. That would be companies like Nike, kind of more legacy brands. UGG and Hoka continue to be very popular. I'm seeing more UGGs as fashion items, which still sounds crazy to me. It's not my market, but that's the kind of thing that they're being bought for now. Hoka is kind of in the same realm. So they continue to grow. The numbers continue to be really good. And we get a little discount recently with the stock fall.
Yeah, good company, great industry. And I'll be honest, I tend to have a glass half empty approach for a lot of these just because it's so hard to sustain. But Deckers, to its credit, has proven that, hit products can be sustained and they are not a one-hit wonder either. There are a lot of products. So there's a lot to like here. Company bought UGG boots, in the 90s? And we're still talking about them. We're still fashion or not. My daughter swears by the Hoka one. This is still a retail business. There's a lot of issues. It's only as good as your latest hits, all the perils, but I respect the track record, so I give it a solid 7.
So that I'm not playing favorites, the only one I actually do own is Teva. I love those Mush 2 flip-flops. Management. A 10 is Warren Buffett. A 1 is Homer Simpson. Both of you are at 6s, Travis.
Yeah, 6, but really it's to be determined. Their CEO took over recently, and this is his biggest job in the industry. His claim to he'd been with the company for a little while, but his claim to fame was really Puma between 2008 and 2014. I don't really remember that being a great brand story. So we'll see how this thing goes. They have done a phenomenal job building, in particular, the Hoka brand up to what it is today. So I think a lot of muscle memory and culture built into the company there, but I just don't want to go too high because we don't really know how this current leadership team is going to play out.
Yeah, I think that's right. I mean, Puma, sure, but a history with Nike too, and they are sort of trying to be into the athletic wear, sort of. So I can see the attraction. But look, this is a company in my mind has kind of defied the odds. So anytime you have a change there, I think you add risk to the defy the odds story. No reason to panic, but no reason to get excited with management here. So a 6.
Financials, a 10 is a fortress. A 1 is yikes. Lou's at a 7. Travis is at an 8.
Yeah, like I said, the company's growing in the mid-teens. Brands, Uggs, the big brands, Uggs and Hoka, are continually very impressive. I can't reiterate enough how you would have thought these would have been fads just a few years ago, but they're clearly not. They're taking market share from bigger names like Nike. That's the one that's kind of fallen down recently. I don't see any reason that's not going to continue. I mean, younger people are wearing these brands and wearing them more and more. So I think this business is far more durable than we maybe would have thought a few years ago.
Yeah, I agree with all of that. And this is why I'm as strong as a 7. But I do think this last quarter, we at least saw at least a hint of what could go wrong with the stock, if not the business. And so that's kind of why I'm a little lower than Travis. They had a terrible earnings season if you look at the stock, but the results were good. Sales, earnings, both up nicely. The guidance was actually really good too. It just wasn't as good as people wanted. And there was talk about some inventory management issues. And to me, it just speaks to, again, to sound like a broken record, this is so hard to sustain. The problems they seem to be having are high-class problems. I'm not ready to be worried about it, but I do think that we could look back and say, yeah, so this is where maybe the inevitable started to come. So I'm a little less bullish on these financials than Travis, I think.
Well, Travis, let's talk valuation. How well will Deckers stock do over the next 5 years, and how safe is it? 10 is a sure thing. 1 is a lottery ticket.
I said 5 to 10% on a return expectation. Safety score is 6. I just want to set those expectations low because the risks that Lou is highlighting are very real in this industry. You kind of go down the wrong path from a shoe design perspective, and suddenly you're falling out of favor. You're losing space in a lot of retailers. So that multiple compression is also a worry from a valuation perspective. They're not super expensive at about 28 times earnings on a trailing basis. But I think if you set your expectations low for a business like this, and then management is able to exceed them, that's where you want to be. I want to see that upside and not have to ultimately pay for it.
So this is interesting because I kind of agree completely, but I expressed it in a different way. I went 10 to 15% just because, look, the track record is there. There's enough of a history that until we see clear signs otherwise, I'm inclined to believe that they can sustain. But my safety score is only a 3 just because that's where I'm going to acknowledge this is a brutal industry. We might have cracks in the quarter. It might be a one-off. Their acquisition track record isn't perfect. Who's got their Sanuk sandals? Guys got those. So look, they do have some hits and misses here. So, it works until it doesn't. So I'm going to assume it keeps working 10, 50%, but I'm also going to give it a 3 for safety because until it doesn't.
That's having your cake and eating it too right there. 10 to 15% with a 3 in safety. See, I was right. Let's talk about,
darn straight.
Let's talk about Top It. Travis, is there a company in Decker's space that you like better?
On Holdings, my favorite, has been for a while in this space. Gotten much more expensive after a recent run up in the stock, but I think their performance has just been phenomenal, growing revenue at about 30% a year. That's our expectation over the next couple of years as well. Not only very popular shoes for things like running and tennis, but also this is kind of the hot, high-end suburban brand. And I think that's really where you're going to ultimately make your money. Also, I think more optionality to grow in things like apparel. Hoka has a little bit of apparel, but On, I think, is really moving into that at a very, very high price point and high margin as well. So love everything they're doing right now.
So, this sector gives me an ulcer. And so if I wanted to say no, not really, but I will say that all the things I admire about Decker, I see a lot of that in Lululemon too. They've shown us similar kind of resilience and a similar, just ability to layer on and keep it going. So at least worthy of a mention here. If you're going to go there, go to brands with a track record of actually getting it right past one summer season.
To Travis's point on the suburban brand, both my mom and I have converted to On running shoes for the cushioning while we walk around. We're not doing any races. My 10-year-old this morning was like, "Hey, I actually like them. I want to get some." I said, "Not until you start earning your own money." And it is telling that we never mentioned Nike once in this. It's a sign of the times, I guess. Thanks to both Travis and to Lou. They've given Deckers a meh overall score of 6.4 out of 10. The business and financial scores were higher at about a 7.5. Look out for a new Scoreboard every market day at 7 p.m. Eastern. Next up is Williams Sonoma. Till then, Fool on.
I have so little fashion sense, but
Just go see what the suburban moms are wearing or buying and
Creep.
Just buy that.
Hello.
I was going to say,
Who do you think is buying my clothes? Not me.
your mom?
Nope. Definitely not.